Test 1, 2, 3. Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 0.3. NASDAQ is down 0.9. S&P 500 down 0.5. Russell 2000 down 1.3%. You can see at around 11 a.m., there was a big drop in the markets. We're going to talk about why. Crude oil is at $61 per barrel. Yield curve is down a few basis points today. 10-year Treasury is at 412. S&P NASDAQ edge up as focus. Well, this article is dated now, isn't it? Just ignore the headline, I guess. S&P 500 NASDAQ nudged lower on Tuesday, with the benchmark index hitting a fresh intraday record high, while investors awaited commentary from a slate of Federal Reserve speakers for clarity on policy direction. Optimism around AI and expectations of looser monetary policy have been keeping the equity rally alive, despite concerns over stretched valuations and limited data releases as the federal government shutdown entered its seventh day. There is this concern that maybe markets are a little bit ahead of themselves. No shit. I don't share that, said Jamie Cox, management partner at Harris Financial Group. Oh, hi, Libby. Libby dropped. Hi, Yaman. Hello. I'll wave at you too. Okay. To be sure, these reports typically carry less weight than key official data, such as non-farm payrolls, but are expected to serve as Fed's best available option to fill the data gap left by the government shutdown. Since the labor market is softening, I think that will be all justification they need to reduce the policy rate further. All right. Before we move on, I just want to address this drop right here. This drop happened, if I remember correctly, if I'm not mistaken. You see that Oracle stock down 6%? Oracle stock is down 6% on news from the information that they lost about $100 million renting out the GPUs. So it just goes to show that buying and renting out the GPUs remains to be an unprofitable process business, and it's not easy to make money in AI. Although some of these stocks have baked in tremendous amounts of profit expectations. So I think it's just kind of the market realizing that the stocks have run ahead of themselves a little bit. I also published an article on AMD after the OpenAI deal. Published an article on Seeking Alpha. You can find it in the comments to my videos and short clips as well. Highly recommend reading that. And I'm going to continue to publish YouTube shorts on my channel as well. Let's continue with the article. Among stocks, Corona beer maker Constellation Brands gained 4% after posting a smaller than expected drop in second quarter sales. IBM rose 3% after announcing partnership with AI startup Anthropic. US listed shares of Trilogy Metals soared 229%. We have an article on that too. After the White House said it would acquire a 10% stake in the company. Dow gained 3% after the company raised its long-term revenue and profit growth forecasts. AppLovin reversed early declines to rise 6%. Bloomberg News reported on Monday that the U.S. securities regulator was probing the company's data collection practices. Ford declined 6% after the Wall Street Journal reported on Monday that a fire that broke out at the company's supplier will disrupt business for months. Ford's business will be disrupted for months due to a supplier fire. Okay. We're going to read the summary on the shutdown. Anytime. The White House clarified that government employee layoffs are not currently happening due to the shutdown, but warned that they could occur if the standoff continues. The Senate rejected funding measures for a fifth time, with Democrats opposing Republican proposal and Republicans opposing Democratic version. The shutdown has frozen $1.7 trillion in funds, impacting various government operations and potentially leading to air travel disruptions. My understanding is that on the 15th, military payments are due. Mid-month payments are due, and that's going to be that's most likely going to be the catalyst that kind of brings everyone together all of a sudden. And so that's on the 15th. So not this week, maybe next week, but maybe by the end of next week, we could see a resolution here. Okay. Trump orders permits for Alaska mining road. U.S. takes stake in Trilogy Metals. U.S. President Donald Trump on Monday said he had signed an executive order directing his administration to permit an access road to the Ambler mining district in Alaska, Jesus, to unlock domestic supplies of copper and other minerals. The White House also announced a $35.6 million investment in Canada's Trilogy Metals, one of the region's possible developers. The investment makes the U.S. government a 10% shareholder in the company and includes warrants to purchase an additional 7.5% stake. I think this is a little bit dangerous practice because you're kind of the government's picking the winners here, not the market forces. U.S. listed shares of Trilogy more than doubled. A lot of these policies I think Trump administration does is seems very good in the short term, but in the longer term, I think it has some dead weight that's not really easily apparent in the near term. So we'll see how that works out. Give me one sec. Okay. Cool. This is something that should have been long operating. I mean, we're gonna skip this one. We covered it. AppLovin probed by U.S. SEC over data collection practices. Bloomberg News reports. The U.S. Securities Exchange Commission has been probing market platform AppLovin's data collection practices, Bloomberg News reported on Monday, citing people familiar with the matter. Shares of the company were down 14% in market close. The agency has specifically reviewed allegations that AppLovin violated platform partners' service agreements to push more targeted advertising to consumers, the report said. SEC enforcement officials assigned to cyber and emerging technologies have been handling the matter, the report said. Okay. CEOs sent Trump a warning. Tariffs will pound our business and will raise prices. U.S. CEOs are bracing for the fallout from President Trump's proposed tariffs. They're concerned, KPMG CEO Tim Walz said on Yahoo Finance's opening bid. CEOs are needing to react as it relates to the tariffs and their supply chains. They're doing cost takeout to react to that additional cost. According to KPMG's latest U.S. CEO Outlook survey, which polled 400 chief executives at companies with at least $500 million in annual revenue, 86% said their organization will increase prices for their goods and services as needed. Walsh noted that companies are taking pricing decisions depending on what their consumers can absorb. What else are they going to do it based on? The survey findings come as Trump sharpens his trade stance. On Monday, he announced a new 25% tariff on all medium and heavy-duty trucks imported to the U.S., set to take effect November 1st. The move, announced via Truth Social post, further marks his push to protect domestic manufacturing. Mexico is the largest exporter of these trucks. KPMG's report highlights that tariffs could squeeze profits, disrupt supply chains, and ultimately push prices higher for American consumers. 89% said tariffs will significantly impact their business performance and operations over the next 3 years, KPMG found. In response, 85% of CEOs said they're already adjusting sourcing strategies to blunt the impact, largely by shifting more production and materials to the US. Those adjustments are playing out across industries, including retail, technology, automotive, and manufacturing. In April, Trump's Liberation Day tariffs marked a sweeping, swift shift in US trade policy. In April, Trump's Liberation Day tariffs marked a sweeping shift in U.S. trade policy. A 10% baseline duty now applies to most imports, with high reciprocal tariffs targeting countries with larger trade surpluses. China faces rates above 30%, while Brazil and India see 50% tariffs on select goods. The European Union settled on a 15% rate under an August 2025 agreement. Additional product-specific tariffs include 50% on steel, aluminum, and semi-finished coppers, and 25% on automobiles and parts. U.S. also ended its de minimis exemption, meaning all imports, even low-value packages under $800, are now subject to duties and fees. Ford CEO Jim Farley previously told Yahoo Finance at Ford's Pro Accelerator conference in Detroit that tariffs were preventing the American automaker from investing more in the U.S., citing a $2 billion headwind. So this is a good summary of the tariffs right here. 10% baseline duty now applies on to most imports, with higher reciprocal tariffs targeting countries with larger trade surpluses. China faces rates above 30%, while Brazil and India see 50% tariffs on select goods, EU at 15% under the August 2025 agreement. Additional product specific tariffs 50% on steel, aluminum, semi finished coppers, and 25% on automobiles and parts. So we're going to land somewhere, on average, going to land somewhere in the high teens, I think. But that's not going to show up in data for another few months. Why small cap stocks are starting to see earnings growth after best quarter since 2021. The tickers might not be exciting as the big tech behemoths dominating headlines, but small cap stocks in the Russell 2000 index are starting to see real earnings growth after a year of strong performance. Following several months of rally driven primarily by growing PE ratios, meaning higher multiples for investors, the Russell 2000's 3% return through September was entirely driven by upwardly revised earnings expectations, according to research published on Friday by Bank of America. Analyst earnings forecasts for Russell 2000 names like theater and hotel operator Marcus Corporation rose in September at the fastest pace since mid 2022, according to the report, as the small cap index hit an all-time high near the end of the month. Those hopeful projections turned into concrete earnings growth. At the end of the third quarter, small cap stocks overall were up 12.4% on the 3-month period, their best since third quarter of 2021, according to BFA. The biggest winners on the month were value-oriented small caps, outperforming the broad index by 2.5%. Interesting. The Russell 2000, comprising the smallest 2,000 stocks on the Russell Index, has traditionally lagged behind the S&P 500, as big tech and other powerhouse stocks have propelled the S&P to new heights. The Russell 2000 has always been consistently smaller, tracking above 2490 on Monday, while the S&P set above 6740. But the large cap stocks that dominate the S&P 500 have been getting increasingly expensive for investors. While the largest stocks on the market are trading at PE ratios more than 50% higher than the historical average, Russell 2000 tickers are only trading roughly 7% higher, according to BFA, offering investors a discount. Okay. Oh, no. Let me think about that. Gold soars about 4,000 as ETF sees strongest quarter on record. Gold futures soared to new all-time highs about $4,000 on Tuesday as investors piled into the precious metal amid a weakening dollar and growing expectations for more Fed cuts. Futures for the yellow metal are up more than 50% year to date, marking their highest return in a calendar year since 1979. That's amazing. Amazing. Okay, Tesla. So, two pieces of news. The first one, obviously, is the FSC 14. I already covered that on a Tesla, on a YouTube short, and on 2 YouTube shorts, actually. But there are two features added. One of them is, you select the destination, whether you want to be on the street or the parking spot or whatever. And then the second one is that, if it comes across some sort of blocked road, it it kind of picks another route. That's it. That's the update. And this, I think Tesla customers waited for this update for like a year now. And what really matters is the critical disengagements, right? Critical disengagements. And I think, I'm guessing it's going to be about 98% of trips will be completed without a critical disengagement. So that means 1 in every 50 trips is going to include a critical disengagement. So that's obviously way, it's not even close to what's needed for robotaxis. So nothing really has changed with the FST 14 update. Let's switch to Olympus says we still haven't tested FST. Yeah. Tesla to reveal cheaper Model Y in response to loss of tax credit. Tesla is set to finally reveal its cheaper EV today, a stripped down version of its best selling Model Y SUV. Per Bloomberg, the new Model Y variant will lack certain features and use less premium materials to offset the loss of up to $7,500 federal tax credit. The federal EV tax credit expired in the US on September 30. CEO said the company's second quarter earnings called that the cheaper Model Y could come out after the tax credit expires. Reuters reports that neither Tesla nor its prominent online followers have said an in person event is in the works, unlike previous major Tesla launches. The expectation is that Tesla may have a smaller online event or post content of the new vehicle online. Expectations for the vehicle include front lighting without the full light bar, a metal roof instead of a glass, yikes, smaller infotainment screens, and likely no second row screen, and removal of ambient lighting and some sound deadening material. It's also expected that Tesla has wrung out costs from its batteries and electric motors to make the vehicle cheaper. I suspect this is going to be just like the Model Y L launch in China. High expectations, lots of hype when it happens in the next few days. But then after a few months, the hype will die out. Tesla said following Q2 earnings that the first builds of a more affordable model occurred in June, with volume production planned for the second half of 2025. Tesla's release of the cheaper Model Y is expected to help grow volume for the automaker, which has seen sales dip in recent quarters, although Q3 sales jumped as buyers bought EVs ahead of the tax credit expiration. Last quarter, Tesla CFO said he expected a pull forward of sales in Q3 because of the tax credit expiration. Tesla reported Q3 lows. Can we all know that? Tesla is set to report full Q3 results on October 22, 15 days after the closing bell. And then the annual shareholder meeting on November 6th. All right. I'm thinking about doing some changes to the formatting here. I'm not sure if I'm going to continue with live format. I haven't decided yet. But there's going to be some long form videos on YouTube channel. Going to prioritize those. And I'm not sure if there is a live. I'm not sure if I'm going to post them on X yet. I think it may be YouTube exclusive. All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.